Hey guys, so I want to finally sit down and talk about time frame. So I had a new student, right? And they pretty much found me on YouTube and they were asking about some of the comments that they usually see on trading videos where someone is asking, what time frame do you trade on? And this is one that I get often, okay? And a lot of people don't quite understand the different time frames. A lot of people who are new to trading, they might open up the charts on TradingView or their platform and they just go by whatever the chart is showing them, and they either never know to actually change the time frame. Really to match the type of trading that they want to do. So let me get into it like this, okay? The map, I'm already jumping forward to something that I want to talk about. Not the map, we'll talk about why I just said map in a minute. But the chart or the time frame that you want to trade on needs to directly correlate to the type of trading that you want to do. That just basically saying that if you want to day trade, a day trader initially will possibly look at the 5 to 15, sometimes the 1 minute, but I think anybody trading on the 1 minute time frame, psychosis. 5 minute, 15 minute for day traders for the most part. If you have not seen my other video where I talk about the different types of traders, then you can go and check it out to fully get an understanding of what that means, okay, by the type of trader. Because if you're a day trader, you're looking to get into your trades and you're more than likely going to be out of that trade before the market close or within, say 15, 20, 30 minutes, maybe an hour. You may hold it for the entire day, but more than likely you are closing trades before the market closes. You have swing traders, and you have scalpers, and then you have those who hold their trades for a very extended period of time. And you may hear those trades referred to as weeks. Okay, it could be them getting expiration dates all the way out to the next year, and they're looking to hold their trades for a couple of months. Okay, so the time frame that you are looking at, that you're planning your trades on, needs to directly correlate to whatever type of trading that you're looking to, whatever type of trader you're looking to be, and the type of trader you're looking to. So you have a number of time frames. The time frame you can actually on most platforms put in your own time intervals, but you may see the 1 minute, the 5 minute, the 15 minute, the 30 minute, the 45 minute, 1 hour, 4 hour, the weekly. You may have the daily, the weekly. You may have the monthly. Okay, there are a number of time frames that you can use, and then of course type in your own. But if you are going to be day trading, well, no, let's start at the beginning. You're going to be scalping. A scalper looks to get in for 5, maybe 10 minutes, sometimes even less. They're just looking to make quick profits on and catching that quick price action that's taking place, catching very quick move. So they may be looking at the 1 minute and the 5 minute time frame. They get in on one candle and they're out by the next. You wouldn't be on the 1 hour and the 4 hour trying to scalp a trade in 4 or 5 minutes. Okay, so you have to match that time frame with what it is that you're doing. And so if you're looking to day trade, then you're going to more than likely be looking at that 15 minute time frame, and then you're also kind of taking into consideration previous day price action, and you kind of need to see all of that together to kind of make your informed decisions based on possibly support and resistance, supply and demand, looking for heavy levels and things like that. Okay, 5, 15 minutes. Now, if you're going to be holding your trades for an extended period of time, you'll likely go to the 1 hour, the 4 hour, maybe even the daily chart. Because if you're looking to hold, let's say, a week or two, then you need to see a bigger picture. The day's price action is not enough to make a decision on a trade that you're looking to hold for potentially 30 days, okay? Because you need to see what happened in a previous 30 days. You need to see what type of setups has formed. That's to go and see if there's any thing on there that may be indicating what could potentially happen over the next week, 2 weeks, 3 weeks, 4 weeks. You have to look at the bigger picture, and to do that, you have to go to higher time. So, in my book, Everything You Need to Understand the Stock Market and Option Trading, I talk about the time frames. Okay, this is the book, and I talk about the different time frames, and I use a map example because this is one of the ways that it was explained to me by my mentor a few years ago. Okay, when he was really helping me understanding the time frame, he was big on using different examples on how to apply real world situations with the charts, with trading, with candles. Okay, and in simple terms. Okay, on a monthly chart, it is like looking at the entire map, like the entire country, right? Not just a street, not just a city, not just a state. On a monthly time frame, you are getting a massive picture of what has taken place over a couple of months, probably even a year, maybe 2 years, depending on how wide out you have that thing, because each candle represents 1 month. And then you got the daily time frame, right? So the daily time frame represents one full day of price action. And if the monthly chart is like zooming out on the entire country, then you have the daily chart, which is like zooming out on a state or zooming in to a state. Okay, you're still getting a big picture, but not as big as the monthly chart when you're on like a daily or even like the 4 hour chart. You still have a big picture, but not as big as that monthly chart is showing. And then we go down some, okay? We got the 5 minute, we got the 15 minute, even the 1 hour. It's like zooming into a city, okay? It's like you're just looking at a bigger picture, but still a smaller picture, but it's focusing on a city, right? You are getting a context over the course of a few days, potentially. Just all depends on how you have your chart set up. So each one of the time frames can be kind of compared to maps. Okay, that's just one of the ways to kind of help you understand when you're looking at bigger time frames. You're getting context on the entire country. Okay, if you're looking at like the 1 minute time frame, that is like looking at a street, because the 1 minute time frame is very fast moving. You don't get a whole lot of context when you're looking at a 1 minute time frame because of how fast moving it is. So that's like looking at individual streets on a map. All right. So I wanted to share that because that was one of the ways that it really kind of clicked for me when he was explaining it, because it actually made sense. All right. The bigger the picture that you need to make any type of informed decision on your trade, then you will just simply pick higher time frame. So if you're using Webull, Robinhood Legend, if you're using TradingView, Mumu, whatever platform that you are using, take the time, especially if you're new to it. Now, well, mostly if you're watching this video, you are likely new to trading, but go to your charts. Look for that number. It may say 1B, it may say 5M. Look for your time interval somewhere on your screen and click it. You will be able to see a ton of selection for what time frame. TradingView, you can see it in seconds, literally seconds, or you can see it in ticks, whatever works best for you. But if you're new to it, stick to the minutes and the days, the weeks, month, those type first until you fully get an understanding of what you're looking at on these charts. Okay, so whatever platform you're using, you should see somewhere on there where you're able to click and change the time frame on your chart, and you will see the change. If you're looking at the same company, just in different time frames, and you will notice that the bigger the time frame is, the less candle you'll see. If you start on the 1 minute, you're going to see a shit ton of candles. They're going to be very fast moving, and they're going to be all across the screen. But then you go up to the 5 minute, you're going to see it in a little bit slower pace because it's taking 5 minutes to make every candle. To the 15 minute, it's going to get slower, and you're going to see less of candle. You go to the monthly, you're going to see a lot less candle, and you're going to see very minimal movement unless it's a company that's just heavily moving up and down. Something like Tesla that may potentially be moving $7 to $10, $15 increment, but you will barely see it moving on that monthly time frame. Just now, what is today? August 3rd. And so on August, well, once the market closed on the 31st of July, one candle on the monthly time frame for any company stock officially formed, and it is now forming August. So August candle is only 3 days in, so it will not be finished until the end of the month, right? So I hope this made sense. I hope this is something that helps you understand that map reference. If you want to grab the book, you can grab it down below in my description. And I definitely want you guys to go and get your own hands on so that you can find the chart that is comfortable for you. And my task for you is to determine what type of trader do you want to be. Do you have the patience to sit down, plan your trades, and say, okay, I want to hold this thing for about 2 weeks because I'm looking at my 4 hour time frame, I'm looking at the daily or the weekly, and this is what I'm seeing. This is the context that I'm getting. And if I do this, will I have the patience to sit and wait for it to make its move? Now, if you're someone who wanted faster, you may need to look into scalping and day trading. But let me tell you this though. Some people can suck at day trading, suck at scalping, but they have better results when they swing trade or when they hold their trades for a longer period of time. Some people just might suck at swing trading. Some people may suck at holding, but they see their best results when they are swing trading. I mean, when they are scalping or when they are day trading. It takes time for you to practice, to get your feet wet, to determine what type of trader you are. No one can tell you what type of trader you can be. Even if you want to get into the day trading side of things, if you are not seeing results, shit is just wonky for you, then you need to take the time to explore the other types of trading. All right? Because you just might see your best results in one type and the other one you probably just need to leave alone. That's it. That's that. I wanted to talk about time frame because I see it asked a lot about what does that mean or what time frames are you trading on? What does 1M mean? 5M mean? 1D? That's just simply time frames of charts that you use to make your trade. So I hope this helped, and I will see you guys in the next one.